Hello and welcome to this video. For those of you who are new to this channel, I'm Dr. Subayal Khan. I'm a business strategist, experienced investor, award-winning scientist, and also help the business owners as a coach and sales mentor. In today's video, we will analyze a stock which has been the third highest stock by percentage holdings in the portfolio of world's topmost 72 super investors. This stock is called Micron Technologies Inc. and is trading under the ticker symbol MU. We will thoroughly analyze the stock to evaluate its potential as a value investment, but first let's see why I'm so bullish on this stock. So it has been the third highest stock, as I mentioned, by percentage in the list of top 72 investors in the world, just below Facebook and Google. It is a tremendous achievement to gain so much trust and attention of the world's best investors with a proven track record. Moreover, for those of you who don't know, it has made to the list of super investors like Li Liu and Mohnesh Pabrai, and their portfolio hold around 47.59% and 47.5% of this stock, which is insane. Furthermore, it is also a 9.94% of David Tepper's portfolio and 7.97% of Guy Spears' portfolio. So before we start our value-centric analysis, I will provide an overview of Micron Technologies. So according to TipRanks, founded in 1978 and based in Idaho, Micron Technologies is a leader in providing innovative memory and storage solutions worldwide. It provides computer memory and computer data storage, including dynamic random access memory, flash memory, and USB flash drives. The company operates through four segments: computer and networking business unit, mobile business unit, storage business unit, and finally embedded business unit. Now let's analyze the Micron stock through the 14 dimensions of value-centric investment feasibility to evaluate its viability as a long-term value investment. And we will also see how much score we get out of 100 for the Micron stock. So I will be interested to see if we can get a score of over 75% and see the parallel or correlation between our feasibility analysis and the criteria used by world's top-notch investors. In other words, I will be interested to see how well our dimensions converge to the same conclusion as the world's best investors. Later on, if our dimensional analysis validates its feasibility as a good investment, we will look at the current state of the market through the lens of 6 critical dimensions of market state to gauge if it is the right time to accumulate Micron stock, or shall we wait for the market to offer it to us for a cheaper price. So let's go ahead and first analyze the Micron stock via the 14 dimensions of value-centric investment feasibility. So first of all, we can see that the current price of Micron Technology stock MU is $75 US. The market cap is 83.305 billion at the moment. The PE ratio over the trailing 12 months is 20.2. The PEG ratio for the trailing 12 months is 8. The earnings per share is 2.37 US. The price to book ratio is 2. So that was over the time frame of the most recent 3 years. So let's have a look at the last 5 years. So over the last 5 years, the average revenue growth year on year was 12%. The average asset growth year on year was 18%. And the average equity growth year on year was 27%, which is actually very good. At the same time, the average net income growth was 380%, and the average liability growth was just 9%. And looking at it over a time period of 10 years, we can see that the average revenue growth was even higher, which is 13%. The average asset growth was 13%, and the average equity growth was 15%. The average net income growth was a whooping 132%, and the average liability growth was just 13%. So overall, the numbers look quite good. So over here we can see that since 2010 till 2020, the revenues have been increasing steadily, and same has been the case of net income. However, since 2018 till 2020, the revenues have been declining, and also the total net income has been declining during this period. And that might be due to the restructuring of the company, or let's say the revitalization of the product or services, or let's say committing more resources to the R&D activities and focus on innovation. So let's go ahead and look at the key ratios now. So over here, total assets over total liabilities. So this blue graph over here, we can see that it has always stayed above 1, which means that the total assets are always greater than total liabilities, which shows the financial strength of the company. Also the total current assets over total current liabilities, which is the black graph over here, we can see that it has always stayed above 1 over the period of last 10 years. Actually, the total assets over total liabilities and also the total current assets over total current liabilities, they stay above 2, which is absolutely great for a company of this size. In the last 5 years, there was a point where the total assets over total liabilities and total current assets over total current liabilities almost reached 2, but after that they remained well above 2, as we can see. But for me, I want it to be over 1 for any company that I invest in most of the cases, until and unless it is a new startup, or else if the company has huge growth potential and is carving a new blue ocean, or let's say creating a new paradigm in its industry. And in the last 3 years, we can see that the total current assets over total current liabilities have remained very close to 3 for most of the time. And the total assets over total liabilities have stayed above 4 for most of the time. So that is quite incredible. And looking at the PE ratio, price to book ratio, and price to sales ratio, I'm most interested in PE ratio because it tells me how much time will it take for a share's earnings to add up year on year to be equal to the current price of the share. Of course, we look at the current snapshot of time, but it gives us an idea of how viable an investment is from a value-centric investment perspective. So we can see that since 2017 till now, it has been a very good investment. See, even in 2020, the PE ratio is 18.85. In 2018, it was on absolute sale. Look at the PE ratio, 4.31, which is incredible. In 2019, again, it was on sale, a PE ratio of 7.93. And in 2017, it was 6.99. So from 2017 till 2019, the PE ratio has stayed below 50% of our threshold of 20 when we shortlist an investment as a long-term value investment play. And over here we can see from 2018 till 2020, we can see that the PE ratio has been increasing a lot. And in 2020, it was 18.85. So it means that it might be due to the reason that it is getting more and more visibility. And as savvy investors have accumulated more and more of this stock from 2017 till 2019 because it was on sale, when it becomes a part of their portfolio, the herd mentality also kicks in, and then people start to buy the stock at a higher price, not at a very discounted price, which is what the savvy investors do. So you see, this is how the dynamics of the market go. The smart money leads the pack if an investment is worthwhile, and then the herd follows. And over here we can see the graph of total asset growth, total liability growth, and equity growth. And we can see that since 2013, most of the times the growth rates have been quite good. So feel free to pause the video at this point if you want to have a look at these numbers on year basis. But I can see that most of the times the numbers are positive and look quite good. And also in the last 5 years, this has been the case. So here we can see the total assets, total liability, and total equity growth in gray, black, and red color respectively. So for most of the time during the last 5 years, all three have grown. And as far as the ROE and ROIC is concerned, that is return on equity and return on invested capital, we can see that over the past 10 years, it has been pretty much a roller coaster ride, up and down in the form of a wave, but the overall trend has been in the upward direction. In 2014, the ROE or return on equity was 28%, and in 2018, the ROE was a whooping 54%. And in 2018, the return on invested capital was 17%, and in 2018, it was 41%. And over here, we can see the same graph, but it is zoomed in. And we are looking at the last 5 years, and over here we are looking at the last 3 years. We can see that the ROE and ROIC have dropped significantly during the past 3 years, but anyway, still it is more or less over 10%, which is acceptable for such big companies in most of the cases, but of course it depends on the industry too. So over here we can look at the gross EBITDA margins and operating margins, and the trend looks similar to ROE and ROIC. So this is the graph for the last 10 years. We can see that most of the times still the graph has stayed over 10%. In the last 5 years, we see a hump where the peak was reached in 2018, where the EBITDA margin was 65%, the gross margin was 59%, and the operating margin was 49%. And since 2018 till 2020, in the last 3 years, the trend is in the downward direction, but still we can see that the operating margins remain over 10%, that is 14% in 2020. The gross margins are over 31%, and the EBITDA margins are over 41%. And as far as the diluted shares outstanding are concerned, there hasn't been much minting of new shares, so the graph is pretty much straight. In the last 5 years, however, we can see a peak reaching in 2018, and then the number of shares outstanding are on a steady decline. And in the last 3 years, a lot of shares have been taken off the market, and there has been a significant decline in the number of shares outstanding. And now is the interesting part. So let's see what score do we get for the last 10 years, for the last 5 years, and the last 3 years for our value-centric investment feasibility dimensions. And let's see whether the results matched the investment criteria of the savvy investors or not. So let's go ahead. So looking at the investment feasibility score over a time frame of 10 years, we can see that all the dimensions over here are a pass out of 14, except two, which are the average ROIC is over 15%. That is not the case. And the second one is the price to free cash flow on average less than 20? No, that is also not the case. So except these two dimensions, all these dimensions are a pass. So feel free to pause the video and have a look at all these 14 dimensions if you want. And looking at the time frame of the last 5 years, we can see that now the average ROIC is over 15%. So that fail over a time frame of 10 years have now converted into a pass. But the price to free cash flow is not under 20, so that still remains a fail. However, now over a time frame of 5 years, the dimension which asks the question, is free cash flow growth is at least 10%, it fails. However, over the time frame of 10 years, it was a pass. And now looking at a time frame of the last 3 years, we get the exact same two fails as in the past 3 years, which shows 100% correlation as far as the performance along these 14 dimensions is concerned over a time frame of 5 years and 3 years. And as I mentioned in my past videos, we normally look for a feasibility score of 75%. But over here, we can see that the score is huge. It is 86% over a time frame of 10 years, 5 years, and 3 years, which is incredible. And that is why it has been one of the favorite stocks for the world's best value investors. So now, what did we conclude? We conclude that the results of our dimensional analysis are very close to what savvy investors have concluded regarding this stock. Therefore, since we look at an overall score of 75, the Micron Technologies has done a great job as far as the overall all-round score over all these dimensions is concerned, which is incredible for a company of this size. But now, before we press the trigger, we need to still look at the state of the market and see the price, sentiment, and hedge fund activity also to see if it is the right time to buy or shall we wait. So for that, let's go to TipRanks and let's investigate. So the first thing which I look on TipRanks is the PE ratio range over the last 2 or 3 years. So in 2019, the PE ratio range was between 17.99 and 10.06. So it was absolutely on sale at one point when the PE ratio was 10.06. In 2020, however, the price of the stock has remained so high that for a very less time the stock was on sale, and most of the times the PE ratio was over 20, which is not what we want. But over here in 2021, we still have some months to go. So let's see how this PE ratio range plays out. But we can see that the PE ratio range was between 18.82 and 13.82, which shows that in 2021, it was okay to accumulate the stocks via slow accumulation. So the second thing which I look at is the analyst forecast. So looking at the analyst forecasts and ratings on Micron, we can see that the average price target is 112.63 US dollars and the current price of the stock is 74 US dollars, as we can see. So the things look quite well as far as the opinion of analysts is concerned, and we have the highest target of 150, which is almost twice the current price, which to me is a little bit optimistic for the coming 12 months. And as far as the current price of the Micron is concerned, it reached its peak over here in April 9, 2021. And after that, we had a severe correction. And after that, it has been going up and down, more or less in a sideways way till August 5. But after that, we again went down considerably to 70.25 US dollars. And now we are seeing the price moving up, and now it is currently 74 US dollars. So it shows that we are significantly down from the high of 95.6 US dollars, around that. So maybe it is a time to accumulate by buying slowly in small chunks and make it a part of our portfolio. And as far as the hedge fund activity is concerned, we can see that their holdings of the Micron stock has been pretty much consistent from June 30, 2019 till September 30 of 2020. There was a small increase from June 30 till September 30, 2020, where it increased to 80 million shares. But as the price started to hike, we can see that the hedge funds are slowly now offloading the Micron stock because now it is getting a bit more expensive. We know that, we have looked at the PE ratio. So I think that they will keep on offloading it little by little until and unless it is on sale again, so that they can accumulate more of it when the price is low and keep it as a long-term value investment. So this kind of strategic selling and buying over long periods of time is what the savvy investors do. So when Mr. Market says that, hey, I am not offering any discount and I am offering a premium price to you, they will start offloading little by little over a long period of time. And when the stock will be on sale, they will start accumulating again. So definitely they see it as a long-term value investment. There is no doubt about that. But at the same time, they are very pragmatic, and when they see that the stock is overpriced, they definitely sell it so that they can increase their holdings over time in the long term. And when we compare Micron with the similar stocks, we can see that as far as the price target upside is concerned by the analysts, it tops the list together with Western Digital. Also, same is the case of the PE ratio. And also we can see that it is a moderate buy, just like Western Digital. So we can see that when we compare Micron to similar stocks, it is very well positioned. And as far as the insiders activity is concerned, there is nothing to worry about. Why? Because since January 2021, the price was just increasing too much for the Micron stock. So it is quite logical that the insiders will sell the stock and keep the profits for themselves. There is nothing to worry about that. Any person will do the same in such a situation. Therefore, all the dimensions related to the current state of the market are a pass, and we get a perfect 100% score over here. So I think that we can accumulate the Micron stock slowly over time to dollar cost average. Therefore, the score of the current market state also suggests that it is the right time to buy slowly and accumulate. And of course, it has outstanding fundamentals too, as we have seen the score for all the value-centric feasibility dimensions. Even though I believe that the top-notch investors potentially accumulated it for much cheaper, I will keep on accumulating slowly, and when the market presents an opportunity where the stock is on a better discount, I will accelerate my purchase of the stock then. Thank you very much for your time. I hope that you found this video useful. Please subscribe to the channel, press the notifications bell, and select the options all so that you can get the notifications of the upcoming videos in time. I will be releasing such videos on weekly basis to give you a lot of value. Thank you very much. Have a wonderful day. Bye bye and take care. Bye.